There were two major factors that give market a pretty meaningful boost. First of all, the vaccine situation and the fact that there were two credible COVID-19 vaccines that showed high level of efficacy and pretty good safety performance numbers were announced earlier, right after the election, and approved by FDA under the emergency authorization pretty quickly. And the market received it very well. And secondly, we also had elections during the quarter. The presidential elections turn out to be somewhat uneventful in a sense that Joe Biden won. The important factor, I think, was that the blue wave that the market anticipated didn't occur. And the reason that's important and the reason that the market got a boost from that is because the markets like split government generally, because they don't want things to swing one way or another. And a split government means that it's more of a status quo, and if there is agenda being pushed, it's not going to be too far to the left or too far to the right. We are getting closer to sort of reopening, and even though there's a spike in cases kind of all over the country and globally, the vaccine, there is high expectation that the vaccination is going to take place, and we're going to be off to the races in terms of market. Market is going back to some level of normalcy. And as a result, we've seen a long overdue rotation from growth to value. And in the quarter specifically, large cap value sort of index outperformed large cap growth and broader market by about 4 or 5%. And cyclicals have gotten a bid, and everything that sort of more stable type of businesses like staples and utilities have been held back a little bit. The vaccine optimism and the cyclical sort of rotation resulted in certain parts of the portfolio performing better than the others. So, for example, financials being cyclically depressed during the COVID have gotten a pretty major boost, along with from the vaccine, along with the election and the stimulus that presumably is coming at some point in the not so distant future. So long-term holding of ours, such as JP Morgan and Bank of America, have done very well for us. And those are major positions, certainly in the top 10 for us. And the fact that this business has remained profitable throughout this pandemic and well capitalized speaks volume about the changes that these two companies, along with the rest of the industry, have gone through during the 10-year after the great financial recession. Within other cyclical areas, industrials, specifically names like Honeywell and Raytheon Technology, have done pretty well as well. Honeywell is a core holding, a top 10 name for us. We've owned it for a long period of time. And to the extent that there is expectation that people are going to start flying back again, and it's going to be safe to fly and go on vacation, that certainly has given a boost to the stock as well. If you look at Raytheon Technologies, the two parts of the business, defense is doing pretty well. It's a stable cash flow growing business. Commercial aerospace is on its back, but the expectation is that competitively, company is very well positioned. And as long as planes start flying, there is both OEM as well as the aftermarket business that is going to come back over the next 2, 3, 4, 5 years. Performance has been pretty solid for the year. All through the period of COVID, there was a lot of volatility, but performance has held up pretty well. During the fourth quarter, there was a period of sharp cyclical sort of rebound, and the strategy being more focused on high quality, less cyclical type of parts of the market, stylistically can lag a little bit. There were a couple of stocks that have held back a little bit during the quarter, even though they've done very well for us over a long period of time, including even early in the year. And the two I'd like to mention is American Tower and Air Products. American Tower is a global wireless tower operator. It's probably one of the best businesses around. They sell space on wireless towers to wireless carriers globally on a long-term basis with price escalators. And the reason stock took a pause and has sold off is because in the US, there's been consolidation taking place between number 3 carrier T-Mobile US and number 4 carrier Sprint. As a result of consolidation, there's going to be network integration to realize synergies. And as this network integration takes place, some of the equipment of Sprint being removed from the sites and results in churn, on the revenue churn that American Tower is going to have to live through over the next couple of years. So we're not happy with short-term performance, but feel pretty confident about long-term prospects. Air Products is one of a handful of global industrial gas companies. It's a very well run company with pristine balance sheet. And it's positioned itself as a leader in this large on-site or coal gasification projects globally. So it became a company that transformed itself more into sort of a annuity type of revenue and cash flow stream, and the stock got revalued. During the quarter, they announced a couple of projects that were temporarily delayed, one of them in China, one in Saudi Arabia. And the stock took a pause or sold off pretty meaningfully. We've actually added to it on that pullback after talking to company, because we think that the long-term prospects for the business are very solid. There is demand for alternative sources of energy. And from ESG standpoint, Air Products plays a very important role from an environmental standpoint, as they allow cleaner use of petrochemicals, oil, and byproducts. It allows to convert coal, high sulfur coal, let's say, to synthetic gas, which generates much less pollution. And it's also, as a major player in hydrogen globally, it could be a very vital participant in hydrogen for mobility over the next 5, 10, 15 years. So we think it's a very well-positioned company with strong management and a very strong balance sheet. If there's anything that we learned in 2020 was that you can plan all you want, but things happen kind of out of blue. And COVID was unfortunately a painful but perfect example of that. So we try not to position portfolio for a particular macroeconomic environment, knowing that things are going to happen unpredictably. We just try to buy highest quality businesses at the most reasonable valuation.